Well, guys, we've just witnessed another record for markets, but what is it and why should we be paying attention? With the Federal Reserve bringing some things back into focus, we've got to pull back on markets. Should we be buying the dip? Well, in today's video, we take a look at the options markets, find out where the put walls are, and of course, discuss the largest dark pool activity right now from Wall Street. And it turns out we have a new number one. Yes, international markets are starting to heat up, and maybe we've got some big moves on the horizon. With metals coming into huge support and of course crypto going ballistic in certain coins, what exactly is going on? Today we discuss stocks, commodities and cryptos in our special weekend edition. This one's not to be missed. I'll see you in a moment. Well, welcome back everybody to the special weekend edition of The Daily Show. My name's Tom, and in today's video, we're discussing macro, lead indicators, and the hottest charts. Why do they matter for us? Well, it was a week of eventful things. We thought there might be a pullback after that post-election pump, and it's led to a sell-off in semiconductors, healthcare stocks, and of course, other areas of the market. Now, why could this be? Well, it always is about us, the retail traders. We know Wall Street loves to trap us, and as I posted over on X, links in the description down below, we've just seen a new record retail inflow peak since March of 2022. What happened last time? Well, we actually saw a significant sell-off, but of course, each time is different. The main reason I want to bring this up was because this is where Wall Street tend to set the traps. And we need to be aware of this because when Wall Street have convinced everybody that the markets actually aren't as good as they look, then all of a sudden they'll flip the switch and of course start to buy up into the year end. We know how it works. We obviously always need to find the key levels though. Timing is everything. So last week, the week before this one, saw the strongest buying inflows since March of 2022. And that means that we saw sentiment shift. Yes, people that were neutral sitting on the fence went ultra bullish. And we already saw this in the sentiment survey reports where everybody that was neutral went bullish and bears kind of remained consistent. Now the question becomes, do retail traders go bearish this week and start buying in the puts? And we've already started to see some very large movements in the puts market, which we'll look at later on. In terms of bull-bear spread, no concerns there, but we do start to see concerns as an investor looking at a multi-year ahead approach. Why is this? Well, everyone's talking about the best stocks now. NVDA literally is now getting front page news articles written about it and how it's a surefire bet to success and everything is fantastic. This is usually marking around 2/3 of the way through a bull market. And of course, we need to keep this in mind as we lead into 2025. And by the way, if you're new here, make sure to subscribe and hit those alerts down below because we do make videos daily about the stock markets and markets around the world. And we believe that 2025 is going to be one of the most important markets, whether you're a trader or an investor. So let's discuss some stats here. Now, we posted this over on our X account as well. And what it is that the two key levels that we need to be looking at from the S&P 500, but also some interesting stats this week. So it turns out that we were down 2.08% when it came to the S&P 500. The average stock was down 1.86%, and 295 of the 500 stocks actually outperformed the index. So what gives? Well, as it turns out, financials were up for the week. And this is one of the most important things to remember. When we're pulling back in the markets and financials are up, that means that in general, the market is actually pretty good underneath. So you must keep that in mind. This is a lot of policy shifts. Why do we know that? Well, we have healthcare, which is down 5.5% this week, dragging the market down along with those semiconductors. Top stock was Disney, worst stock was MPWR, down 24.57%. So why is this so important? Well, the daily 20 moving average and the anchored VWAP sit at around the price that we closed on Friday. We also know that there is a daily 50 moving average, which is what we bounced off based on the post-US election, which is just underneath it. These two levels tend to hold pretty good buy the dip type of support. So we've actually made it to one of the first key levels already if you're watching this video. So why do we need to be paying attention at maybe some of the history that we've seen post-election? Well, if you've been looking at 2016 or even 2020 or even 2012, you may be aware that small caps and also some other markets tend to do pretty well. In fact, if we overlay 2016 to the year end, we'll notice that the market is buying the same types of areas that it did in 2016. And this is because, of course, we're starting to see similar policies. What have we seen? A potential of a tax cut from 21% to 15% that the market's starting to digest. And of course, deregulation as well, which can be very good for the regional banks. But what about the Nasdaq? What about the data here? Well, we saw the Nasdaq drop every single day of last week, and that puts it into a very interesting kind of period. Whenever we see the Nasdaq do this and it's been trading above its 200-day moving average, generally that's meant that we're in for a little bit of chop, and then overall the next 3 months is usually very positive. 89% of the time positive, 9.7% the median return. Hey, that's nothing to sneeze at. And you'll notice most of these dip areas, when we've seen this type of thing occur, have led into pretty decent rips. Over here, and more importantly, probably over here, I guess, led into those sideways for a while. But generally speaking, is actually not as bad as you would think when it comes to the data. So what can we expect with the second Trump term? Well, it turns out Goldman Sachs have put out their latest report. You can pause the video here if you want to have a look at it. But I like to not speculate on these things. Instead, let's not understand this. Let's instead look at the price action, the flows, and what Wall Street is really doing. Do we know all of these things are going to go through? Well, we can say some of them will, because of course it looks like, well, we know actually the Republicans have got control of everything. However, that doesn't mean that everything is going to pass still, because people can have disagreements. We know how politicians are. So why is this important? Well, we do need to look at the facts. The facts are that the S&P 500 is trading at a pretty high level. 22 times forward month PE over earnings ratios have been hard for the S&P 500 to hold in the past. And it is certainly a warning sign that if we get up to something like 24x, you'll need to have the blinkers on, because of course the last time we reached that was the tech boom of 1999 into 2000s, and we all know how that ended. Is this time any different though? Well, of course we can break down several different market categories, and one of those is the small caps. We've already been talking about the small caps looking a bit better post-election, and that they are trading actually well below the usual parity that they have with the S&P 500. Could we see catch up into 2025? Well, of course, that is the discussion that most people are having. And the post-election pump is a pretty real thing. The inauguration dump is also a pretty real thing. And we're starting to see kind of people playing out both of these in the markets. Now it's seemed as maybe, oh, well, maybe Trump is not as bullish as we once thought onto the markets with all of these tariffs and policy changes and appointments and stuff like that. Again, let's ignore the news. Remember, if it's in the news, it's in the price. Don't worry about that stuff, guys. Instead, let's focus on the data, focus on the key levels, and whether we're actually seeing buy the dip flows coming back in from the most important people, which is certainly not us, the retail traders. So here are the post-election pumps or bumps. We've seen it come through in 2016, 2020, and of course, this is what happened with now a pullback to around the 61.8 for the Russell 2000. Let's keep going through some of the data though. We know that when we come into a US election, no recession, pretty good structure. Overall, this is overwhelmingly bullish when it comes to buy the dip style markets. And that's because we're only 2 and a bit years through this current bull market cycle. And right now, we are tracking pretty much right in the middle. Now, this would suggest that we still have more to go. And of course, you can't guarantee it by looking at market cycle charts like this, but it does help us to get a little bit more confidence of where we're at and what things are doing. So let's now look at some alternative assets. Now, you guys may know, if you've been watching for a while, since $1,800 an ounce, we've been incredibly bullish on gold. Now, why is this? Well, there's about 20 different reasons. However, one of the good signs is the gold overshot itself last week, and that means it went down a little bit too fast, a little bit too quickly, and everything started to sink across the board. Whether it was copper, whether it was gold, whether it was other metals, and of course Chinese stocks, they've all come into a very big zone. And we've recently seen, whenever gold's gone under its 50-day moving average and dropped another 2%, it to be a buy. Now, of course, this has only been a phenomenon in 2024, but it does make sense to some of the key levels. And we're still waiting to see those big flows come back in, and more importantly, the price action to pull it along. So what about crypto? Is crypto over yet? Is it done? Well, as you're about to find out in today's video, we've seen some pretty large moves in certain cryptos thanks to some policy changes and certain people leaving. However, Bitcoin is most likely still at the beginning of its major rally. We've seen these post-election bumps and pumps do pretty well. When it comes to 2016, we obviously saw a huge run to 12 months later, 1 year later in 2020 to 21, and even 2012 to 2013. These tend to be the biggest pump years of all when it comes to crypto. And it shows you again that end of cycle style run. Risk on, everyone feeling great, and usually pullbacks being met by bull demands. But of course, there's always got to be a reason why markets sell off. And as we discussed last week, it looks like a few people have taken some initial take profits on some of the cryptos. Coin, big transaction. We know exactly what happened straight after that, started dumping off. MSTR, second largest transaction pretty much of all time, we start to see it dump off. And usually what happens with these is they pump a bit and then they kind of go into a sideways or even down market. So it could be that we've seen that pump come across some of the stocks anyway in the crypto world. We also saw the same thing with Tesla, some monstrous transactions coming in near the highs, and since then the markets have dropped off. So why am I saying this? Well, because even Bitcoin got its largest trade on BitU last week. Why? Someone's probably taken profit. Maybe it's time for us to now consolidate. Now, always in crypto, there's generally a bunch of other overall markets or altcoins that start to go after Bitcoin's made its initial move. We'll talk about that a little bit later. But I also saw even this one. SMCI gets in the news. What is it? It's potentially going to get delisted, potentially going to bust, potentially going to do everything like that. And then all of a sudden you see this huge transaction come through, the 2 times long, and of course, bang, straight into some pretty epic profits, almost making like 100% in a day. So it just shows you again, if it's in the news, it's in the price, guys. Don't pay attention to that stuff. Instead, look for opportunities. Now, speaking of which, you will have known that recently everyone's very down on China again. Oh, it's terrible and everything else. Now, remember, we've already talked about this several times through the year. We've been right several times as well together. Congratulations. And we've seen the pump. We obviously kind of thought there was going to be a dump, and we've made it back to that synergy kind of level, the area that we were looking at for quite a while now. Well, as it turns out, someone probably, and we say probably, just closed their bearish positions on Yang. Look at this. The number one largest position ever traded throughout Yang has now gone through. Could it be a new bearish short position? I kind of doubt it based on the 61.8. Does that mean it's a straight buy the dip? No, probably not, but certainly something to be paying attention to. You can also see here NVDA got an intraday large trade as well, put onto it last week. And all of these things are kind of starting to synergize together with, well, maybe we're going to see a bit of a halt, or maybe this was even a buy, who knows, with the semiconductors. But some large transactions are going through, and this means that we're going to most likely see large moves. And that's exciting for all of us as traders and investors. We're still in earnings season. These are the major earnings coming out this week. And in terms of really the economic news, it's not as big as we saw last week. So this one will be allowed to do whatever it wants to. It's going to be options and flows that we'll need to pay attention to, and we will be covering that. I also want to just say a big thank you to some people who have been leaving us reviews for our course. It's really appreciated, and it's awesome to see so many great results. We've actually had so many come through, whether it's people in gold, Chinese stocks, American stocks, it doesn't matter. Everyone's been seeming to make a decent amount of money this year, and I hope some of you out there have done okay as well. Now, do remember, during all of these times, it's important to take a step back and say, you know what, was it a little bit too easy? Well, maybe it was, but the key is replication, yeah? And I want to say thank you for this review, because I think it really kind of encourages people, but more importantly, it shows what I've been doing for all of these years. And I just want to read this area. Tom, it puts together the whole puzzle, which is a melding of trading, psychology, technical analysis, macro analysis, and years of market experience. Yes, I've been trading since 2007, probably even before that if you really wanted to count it. And really, I've been doing it since I was 16, even before that. So the key is to bring multiple confluence reasons together. whether you buy one of our courses, whether you don't, whether you watch the daily show, whether you do anything. Remember, it's about bringing together the pieces of the puzzle and replicating it, yeah? Don't fall into the FOMO, don't fall into the fear. Instead, just focus on what you're good at. Where is your edge? Get it, define it, and keep doing it. All right, let's move over now to why this week wasn't as bad as maybe some people thought. Well, we can see here the biotech industry really copped it with that RFK Jr. kind of appointment. We can see gold getting absolutely smashed, especially gold stocks, into those key support levels. And we can also see here that financials and regional banks held firm over the last 5 days. That's a good sign for the market's overall health. We can even see here on Friday, financials were the second best performer, utilities up there, one of our favorite sectors of 2024, and of course, biotech not doing so well. But let's have a look at the S&P 500. Should we really be concerned about this pullback so far? Well, if you're a longer term investor or even a swing trader, you really shouldn't be too concerned. Okay, yes, we've sold off this high again. Not surprising, 6,000 is a huge call wall. We've seen an advanced decline line start to pull off. Okay, that's again not that surprising. But have we broken to a lower low? The answer is quite simply no. So should we be concerned about anything as it's trading above at least 5,700? Not really. I think this market overall still looks very healthy. And again, the financials make me think, I think that Wall Street might be trying to buy the dip here at some point. So what are the key levels? Where are the key levels? Well, there are three main key levels. They're where we're at right now, which of course we've been talking about a bit. Daily 20 moving average, well known to be a bit of the buy the dip zone. We've got the 50 moving average, which is sitting, or it's going to be sitting around that 61.8 fib. And then of course we've got the key 5,700 zone. But as you guys know, this is a market that's been trading a lot on options. So let's take a look at the options for both the Monday, the Tuesday, and into the OPEX events, and of course the overall expiration. So let's now check out the 18th. Well, first up, 5,900 is the put wall. And that suggests that even though we're in negative gamma right now, maybe markets will try to hold above 5,900. It's such a huge put wall, it's likely markets will try to get above that. Not necessarily guaranteed, but still likely. Now, when we move over to the Tuesday, you can see there are so many puts. If we do end up falling lower, you may notice 58.20. Now, 58.20 just so lines up with that the daily 50 moving average and the 61.8 level. That is going to be one to certainly focus on. And last week we talked about 58.80 potentially being a bit of an area with 59 where we saw those puts. And you can kind of see why that is. And you can also kind of see that if we keep dropping, there's clearly a level that Wall Street is targeting. And why do we know this? Well, when we look at the 20th, so we go to the next session, you can see here 58.50, 58.20, 5,900 continue to be the strong puts. And all of a sudden, we've gone from calls everywhere to puts everywhere. And we always know that when retail starts loading puts all over the place and starts going, this is the end of the world, collapse is coming, that generally speaking, it's not. So I think that's something that's worthwhile paying attention to. I want to bring back the CTAs. They've been dropping over the last week after that pump up. Probably no surprise. They're based on, of course, momentum funds. And we continue to see NVDA struggle around that 148, 150 zone, now shorting back off. How low could NVIDIA go? Well, the only put level we have right now is around 135. When we move over to Tesla, you can see again some kind of good and bad signs. The good signs are it pumped. The bad signs are it looks like Trump's going to get rid of the tax credit, and it looks like Elon is pretty focused on getting some other levels of power. He seems okay with the $7,000 tax credit. Now, take of that what you will, but it's likely that 300 is where the put wall is for Tesla. And unless we're able to really regain back above 330, maybe 350, we're not really going to enter back into strong positive gamma. All right, let's jump into the charts that we need to be watching. First up, US 10Y. Have your alerts set, guys. If this thing goes ballistic and breaks through 4.5 plus, maybe 4.55, and breaks this downward trend line, that's a big deal. That is going to be a cause for concern in Wall Street and could show reinflation and all sorts of concerns. So remember, the market has ignored this. Let's keep looking at it. We must pay attention to all readings if we can. Now, that's made treasuries, of course, do really badly. Basically, treasuries have done nothing. And as we've reported recently, we've started to see large, big movers start to appear all over this level of treasuries. But we still don't, you can see here the volumes have started to uptick, which is a good sign for accumulation. But we still don't have price action going in that positive direction. Have we seen the daily 20 moving average be closed above? No. So for treasuries buyers, there's no real catalyst just yet. That US 10Y must hold below that trend line. It's very important it does so. When we move over to the options market and take a look at bonds, you'll notice here bond spread doesn't seem to be too dangerous just yet. At least we're not seeing the cracks appear, and that is important. Some people, of course, looking at certain bonds indicators and freaking out. I still think it looks okay. And when we look at the overall American consumer in a different way, you'll notice here we've got an all-time high. So really, again, when you check out everything that's going on, is this a market that you should be terrified of? That seems like a pretty strong uptrend to me. And even home builders, which is another indicator we look at, still hasn't exactly shown a significant weakness. Yes, it was weak last week, but it wasn't breaking new lows. And I think this is all very important for us to focus on when we consider what we just saw in terms of a 2-3% pullback in certain markets. US dollar also has hit a critical level as we saw the US 10Y kind of peak off there. And of course, if the US dollar ends up breaking through the 107.20, that could be a catalyst for all sorts of concerns. So we must be watching the US dollar along with the US 10Y. If I had to guess, I'd say there's some resistance here, but we'll find out. Copper, good, then bad. So what does this mean? Well, if you combine both of these, you have a low, you have a high, and you have basically the close at the same price. That's a long leg doji, guys. It means it's at equilibrium. And as I always say, this is a inflection point for the markets. So this is just so happening when we're seeing Chinese stocks come back to our 61.8 level. Now, if you've been watching for a while, we hit this level, and I've been yabbering on about this level now. And we just saw one of the largest trades, well, the largest trade ever to go through that BearX fund. And that tells me that some big whale most likely has taken some profits and they're pretty happy with themselves. Could this be an inflection point? We've got copper sinking with the Chinese market. They are pretty important. Another market that you want to be looking at is, of course, iron ore. When you're looking at these types of markets, we need to see them all sinking together. And iron ore has made a new low and hasn't come back down to that 713 level. So again, we'll be looking for bid prices across all of these. We're not quite seeing it. So what about gold? Well, gold's come back to weekly mean reversion, which is often considered one of the most important areas. As you can see here, it respects weekly mean reversions. One of the best, guys. Almost hit the microphone there because I got a little excited. Why? Because you know I love gold. So weekly mean reversion has been hit. Second bull zone obviously melted the first bull zone to the downside. This is a very important point for gold. I'd like to see it buy somewhere in this box to around here. Have we seen the initial buyers come through yet? Not really. I mean, a little bit of a bid. We're still looking underneath the structure, but there's nothing to report back on just yet because we haven't really seen a strong break to the upside. So what about silver? Often considered kind of like when you've got Bitcoin as gold, this is like Ethereum or Solana. Well, it's come back down to a very important trend line, key level, and seen a little bit of bid buying. Has it done enough yet? Not before it gets above 31.20. It's very speculative here on the smaller time frames. Some position-based traders may like it quite a lot, but as we scroll down the 2 hour, you'll notice that this downward trend line has been slightly broken above. So let's just take this through. You'll see somebody is trying to buy, and it's starting to look a little bit better down here. Not quite, though, enough to be what I would call a super replicable trade. US oil, on the other hand, looks terrible. The drill baby drill concept or whatever's going on here, that's a terrible close for it on the weekly. We have been looking for day trade buyers to try to buy it back up to this 69.20. We keep seeing that fail. As you can see over here, 69.20 failed again. And this new low, it's not good. So it looks like the bears are still in control of US oil for now. And if it's about to give up this level, oil could go a lot lower. Remember, oil could easily go to $60 a barrel and not even blink twice. So yeah, this is the worst close that we have seen. Doesn't mean it's going to go down, but it's the worst technical close that we've seen in like a year and a bit. So it's been a while. US 2000 small caps, how are they going? Almost back to the 61.8. The daily 20 moving average, a pretty cool level. Certainly a good zone, 2300. I'd like to see bid around this price. If we keep falling and the S&P 500 wants to do a little bit more damage first, going down to maybe 58.20 even, or that could push this down even further into maybe even the 2260 zone. Again, I like small caps at the moment. They did break out. Maybe a few too many people found out about that. Who knows why? We obviously hit our first major target. And what I wanted to say here was if you're a trader, okay, investors, who cares? It's swing, it's uptrend, it's all good, yeah? So it's all good for now. But first major target, take a look at that. I mean, guys, good work. That's precision, yeah? Well done. So when you've got key levels, it's not a coincidence that the market hits these zones. People say, oh, technical analysis, it's tarot card reading, whatever. It's psychology, guys. That's what it is. You are looking to really trade the market based on psychology. And you don't just nail these kind of key levels for no reason. Remember, once you bring together the confluence reasons and you're really good with it. Remember, I don't use that many indicators here on the channel. Instead, I'm thinking about flows and human psychology. Just a quick thought here, by the way. Did you know that fear is 2 times more powerful than greed to humans? There you go. So if you make $100,000, you'll be like, yeah, cool. But if you lost $100,000, you will feel it 2 times worse than the uptick. So just always remember that when it comes to markets. But overall, you'll notice an absolute smash. So this is a very important pullback. We are looking for bids. We'll keep looking at it this week. 61.8 also hit on the Nasdaq. You'll notice 20,400. You can see here that it's still in an upward trend, giving back a lot, freaking a lot of people out. In fact, this has now dropped. What is this? Probably about 3 and a bit cent. Oh, actually a bit more. So it's dropped 4% here from the Nasdaq. And that's not bad. That's actually pretty average kind of pullback. But the Nasdaq has been struggling for a while. It's really the semiconductors. We need to start seeing the semis find some bids. And of course, if you look at that, that's just a new little low here. And if it does rip around here and then gap up, well, we know what that's going to be. It's going to be an island reversal. So we'll be looking for these types of signs. We just don't have the bids in place yet. Now let's move over to XRP. Now, a lot of you know that I don't like this coin at all, but you may have also known that recently I've been talking about Cardano for the first time. So it looks like Gensler is gone. And of course, that gets rid of some problems for XRP. And also it looks like Trump's idea of implementing 0 taxes on coins of crypto companies based in the US. Supposedly XRP is one, HBAR and ADA. So yeah, that's a big squeeze. With XRP, we know how it usually plays, pumpy into dumpy, but we'll see how it plays out this time. And just a reminder, you might think, well, I told you, Tom, XRP is good. No, XRP has still sucked for years, okay? Look at these people over here. Someone got stuck in this, and I think it went higher than this actually. It went like $4 plus at one point, and it got trashed. You look at other coins, they're nowhere near as this bad. What about ADA? It's also done well. Cardano, of course, still ripping. It just shows you that the market seems to be moving into a few alts at this stage. But let's look at the most important one, Bitcoin. Could this be going sideways to even getting a pullback potentially to 80K over the next week? Well, you may know that I'm pretty bullish on it. The 12-month stat's pretty good. The stat into April, March is pretty good. The stat from September was really good when we started to turn super bullish on crypto. Since then, by the way, September's down here. Very nice. Well done, guys. A few people sending me through some stuff. In fact, one person has a 450% return since then. A little bit too much leverage. You probably should down that. But either way, well done. 420% on a lot of money is not too bad at all, is it? Better than me. Anyway, Bitcoin obviously at these highs. You can see that we've got consolidation. And this is kind of what I expect. Let's digest this move. Maybe we can squeak out a little bit higher to just underneath 100. I think that 120, 130 is on the horizon for Bitcoin ultimately. So an investor or swing trader won't really matter. But I wouldn't discount this level. So for now, we've got a little bit of stop signs. We're obviously seeing some signs of consolidation. And it's not just there. It's also through Ethereum, which we reported on last week. And you know, I like all of these. I still think they're going higher, but again, maybe we've got a chance of a better pullback. For the week ahead in terms of news, guys, there's not that much going on. Just a bunch of Euro news and some PMI on Friday. We'll, of course, be going over everything that you need to know as it happens. But in the meantime, if you're interested in finding out what we do and obviously the replications that we like to put in place when it comes to trading, guess what? It's Black Friday. It's just around the corner. So our sale is on. Links in the pinned comment down below. Follow us over on X as well. And if you want to follow me on LinkedIn, you can do so as well. I'll be posting a bunch of information there. It's a little bit different to this channel, a little bit more generalized stats, and of course, some stuff about property, because I do like property. I like it all, and that's why we like to post it. Thanks so much for watching. You have a fantastic weekend, and I hope you've done all right recently. If you haven't, don't worry. We come from the abundance mindset. There's always new opportunity, and guess what? We've just seen a lot of pullbacks and a lot of synergy. What was hot just a few months ago, it's now not. Hey, maybe it'll turn around. We'll be there for the flows. Make sure to sub. See you soon.